Good morning, everybody. Hey, welcome to Friday. Welcome to September 18th. I hope your week has gone well and you got some exciting plans coming up for the weekend. You know what? Yesterday was kind of, not a great day, a little bit on the downside. We'll talk about that and more when Dave joins us coming up next.
And look, found love right where he is. That's thinking out loud. Good morning. It's 8:40 now. 20 before 9. Time to check in and find out what's going on Wall Street this morning through the resources of Statler Financial Services, where Phillip Statler is standing by this morning. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. Welcome to Friday. It's been a week this week, that's for sure.
That is for darn sure. I was saying earlier this morning on the air that it's one of those days where about first half of the week it felt like it went through like the proverbial tin horn, and the last couple days have kind of dragged. I don't know whether it's Thursday or Friday today, and then on alternate moments it feels like it ought to be Saturday already. Just a weird week in general, hasn't it?
Yeah, it has been. And as we get closer to the end of the month and the end of the quarter, I think we're going to continue to see some interesting swings in the volatility.
I suspect so. As we talk about volatility, setting the table this morning, red day yesterday on Wall Street. Dow was down by a little under 0.5%, 130 points on the Dow these days almost feels routine, but it was a red day. NASDAQ was down by a full 1.25%. It's back under at 11,000 now, down 140.1 points yesterday. And the Standard & Poor's was off about 0.8%, down by 28.5 yesterday. A lot of that was just still the weirdness of the moment, the worries about what the Fed's doing, what they're willing to do, and the general lack of certainty about where the economy is going. And we start out this morning with even more uncertainty because, boy, we're spending money on the federal government level like drunken sailors. $170.5 billion current account deficit reported this morning. And that's even worse than the analysts expected, isn't it?
Yeah, it is. I mean, my guys expected 158.4. So, and that was, that number itself is pretty bad. So,
yeah,
to come in at that 170 number, that's a significant decline there. So, not a good sign there. I haven't seen the other thing that's supposed to come out today. It may not come out till 10. Is the leading indicator number. And I haven't seen that yet this morning. That one's going to be interesting too, as well as the Michigan sentiment. We've had the New York Empire State number. We've had the one that comes from the Philadelphia Fed, but now we've got the Michigan sentiment one supposed to come out today too, and I haven't seen that yet either.
I have those numbers in my schedule coming out at 10 this morning.
Okay.
So that's going to be the midday, either shock or boost, depending upon what happens, right?
Yep, exactly.
So you had an interesting report talking about, where the market's going. We talk about volatility, and when we get toward the end, we talk about managing risk and whatnot. The guys that have a running ton more money and a running ton more inside knowledge than we have been moving their money in interesting directions. An insider trading report that you pulled down, I found kind of interesting.
It is, and for some people, it's actually one of the things that technical analysts use sometimes to determine when to buy and when to sell. People that are tied in to companies and get company stock, well, they have limited periods of time that they can sell or buy stock. They call them open windows. And so the last week ended up $473 million worth of stock in closely held company, or not closely held companies, but in publicly traded companies was sold. And only $9.5 million worth was purchased. So that tells us people are trying to reduce their holdings in the companies they work for. And that's usually not seen as a good sign for those specific companies that folks are looking at.
I know when I used to work for a publicly traded company, and I was on the list of people that couldn't trade stock until after the quarterly report came out. I know that every time that one of our big stockholders decided to dump some shares when we got into the open window, our stock price ended up really tanking after that because, well, as you say, the investors that watch the insiders, well, there's more than that report actually said if what's-his-face is now all of a sudden selling his holdings.
That's right, and the vice versa, right? If I mean one of the newsletters I subscribe to and just kind of watch it, they'll say, "Hey, look, you need to buy this stock because hey, the CFO or the CEO just dumped another $25 million and bought stock." So that must be a good sign that they know better than you and I what's happening down the road. So that's an indication maybe you want to buy. Vice versa, right? We come in and they start dumping stock. Well, is that an indication we need to sell, or do they just need money for something? Sometimes you get folks that just, like Tesla, right? You got he sells stock sometimes out of Tesla to fund some of his other ventures out there that need money.
I know in our little company that was the case sometimes. We ended up having to leak it out through Yahoo or something. Don't worry about Steve. He's just making his kid's college tuition payment or something. I mean, there are times like that in the process when there's a small number of stockholders that swing a lot of the stock price. The rumor can end up scaring people, and really all the guy is he's paying his kid's tuition at Yale for the year or something.
Yeah, exactly. So there are times like that there is a reason for them selling off some stock because they only have a certain window they can do that.
Understood. And it sometimes is done an awful lot right at the end of earnings season because the window prohibits us from being able to mess around with our holdings until after the company releases its quarterly reports. And it makes things interesting. Another thing that might affect the markets today on an otherwise relatively quiet news day is the fact that it's that proverbial quadruple witching hour today, which always gives rise to some wild swings.
It does. That's that point where stock options are expiring, futures are getting, they're flipping them over. So it's just a lot of times on a day like this, we'll have an extraordinary high volume of trading going on, and that sometimes can affect what happens in the marketplace.
And it makes a difference depending upon what the expectations of the big money is, because these options that are expiring are things like put and call options. If somebody decided to sell a series of stocks short and they ended up going through the roof, well, that's going to make one change in the market. If you were actually buying bullish and expecting upticks and that didn't work out, well, that could also make a weird swing. So you really don't know what's going to happen as things go.
Well, that's true. You don't. And that's why this day is when it happens, it's just has people a lot of times on pins and needles.
Absolutely. Before we went on the air, I mentioned the quadruple witching. I said it's not as big a witching hour day as some of the quad days have been.
That's right. It's not. There's not as many sectors or not as many stocks that are in that situation right now. But still, you will see a tick up in volume today because of it.
Understood. It's always a fascinating day, and one of which you sometimes shrug off a weird change. End of earnings season pretty well over. We're starting to get guidance, and we're starting to get some inkling as to what's going on. You did have one straggler, I know, on our earnings report, and it's one of those household names, U.S. Steel. How did they do?
They missed, and I have just a little bit about them. They came in at $1.45 on their earnings per share. They were expected to do about $1.52. And I didn't see their stock price yet this morning. So that's a slight miss. And so we'll see how that affects their stock today as it starts to trade.
I don't see them on either the big winner or loser list this morning. So evidently, at least people from a percentage basis weren't all that excited. Off day yesterday on Wall Street. Weird things going on today on a relatively slow news day. Phillip, 45 minutes before the real money gets thrown around. Do we have any kind of a trend this morning?
Well, it is trending better than yesterday, Dave. We've got the Dow is basically flat right now. I mean, it's down $7.
That's a big recovery from what it was a little while ago, though.
You're right. I've seen it down. I think I saw it down as much as 200 points earlier this morning. The S&P 500 is up 0.25%, which is $7, a little over 750. The NASDAQ is up a little over 0.5 point. So we're seeing some green ink there, which is good. If we flip the commodity side, we've got silver and gold both advancing today. Silver is up 0.25%, and gold is trying to get up 0.5%, not quite there yet. And then crude oil. You and I should be excited. It's up over 40. It's at $42.70 a barrel. That is down from yesterday's close by about 0.6%.
And it's kind of nice with them looking at reopening the derricks out in the Gulf. At the very least, we're not being affected by supply chain problems either. Staying above 40 would be kind of nice.
It would. And if we can open those things up and it stay above 40, that would be a bonus.
Yeah, my gas prices stayed at $1.85 a gallon like I filled up yesterday. I wouldn't complain either, would you?
No, absolutely not.
That'd be cool. Overseas markets, the Asian rim generally up this morning at the close. Europe is frittering either side of the zero line. British markets are about 0.5 point down. German markets are about 0.5 point up halfway through their day. So no trend out of Europe. Asia generally optimistic over what they got from us from yesterday's trading. We were talking about volatility, talking about witching hours and everything. That ends up messing up a person's retirement portfolio. And if you got too much risk in that portfolio, you could cruise for a bruise without even knowing it's happening. How do I get a hold of you to do that, Phillip?
That's true, Dave. Hey, they can give us a call at 863-382-0037. It's a great opportunity right now for folks to get a second opinion on their current portfolio for somebody that is totally independent and figure out what that risk number is compared to your risk number and make those adjustments now while the market is still relatively high. Give us a call, 863-382-0037 for your financial x-ray. Follow us on Facebook where we repost this show every morning. Follow us at Statler Financial Services on Facebook, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And if you're not close to a radio, you can stream it on your cell phone, too, at newstalk730am.com or on our app on both Google and Apple as well. Phillip, thank you so much. I do appreciate it. We'll catch you on Monday. You have a good weekend.
All right, man. So there's no reason for anybody not to hear us, right? Have a great weekend. I'll talk to you again on Monday.
Thank you, my friend. Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Wait and see.
Folks, I want to thank you for joining us on this Friday. Not quite the last Friday of September, but we're getting really close. I hope you have a great weekend. I look forward to speaking to you again on Monday.